This is Teddy Keckstedt from Forex Trading Unlocked, and we're here on November the 19th with a little midday Forex market analysis for you. And before we jump into that, we just want to real quickly go over our disclaimer real quick to remind you that this webinar is for illustrative purposes only. If you have any questions, excuse me, just leave some questions in the chat bar on our Twitch station, and we'll try and address them. All right, with that, we're going to jump to our live screen, and we're here at the www.forex-trading-unlocked.com website. And on our menu bar, you have different options here. We're on the workstation page. So the workstation page has an economic calendar, so you can see what's going on. I already know that the numbers are out, and we have nothing really coming up tomorrow for most of the markets. A little bit something for the British pound and a couple of and also the Canadian dollar. But outside of that, there's really nothing tomorrow coming up that's major. Okay, so let's get rid of the news section here, and we'll also get rid of the volume here and clean up this chart a little bit. So we have the Euro US dollar, which is making a nice little follow-through move today, and we're going to put in our little lines in the sand, if you will, as far as where we're looking for breakouts. So the current low from a few sessions back, this here would be our downside breakout level that we're looking at right now. Currently, the market is obviously in a short-term uptrend. It was been in a trading lower for the past couple of weeks, but we've had a nice little recovery the past few sessions. And overall, over the past since October 1st, the Euro US dollar has been in a positive to neutral bias. And I think that since we have the dollar index, which is kind of looking a little weak right now, that we're probably going to see more of the same with that going on as we trade into the rest of the week and stuff. So let's see we have going on in some of our other markets as well, but let's just get this arrow up. And okay, we'll put this right here. So this is our pivots for the Euro US dollar. So this here, right here, is our lower move low over the short term trading, but now we have over the past month and a half, this could be our higher move low off of this low here. So if this is the case and the bullish trend is to continue, then we would most likely see the market to kind of bobble around here and then try and make a challenge of this area right here. This is pretty much the way the market has been bobbling around. It's been in a very neutral trading zone here for the past 4 months, really. But now we have a slight boost lift here and we have this rising support line here. Now this is not that steep, so this is a very maintainable trend, especially if the dollar index is going to start to show even more weakness. So right now it looks like, in the longer sense here, we had an established low here, we have a high, we have a higher move low, and right now it looks like we're going to get ready to kind of bobble along and get ready for a challenge of this resistance area here. A breakout of this high would then be obviously indicative of further bullish action for the Euro US dollar. And I think that one thing you can really do is rely on the dollar index right now as kind of a guide. Okay, let's get this off of here. We don't need this. Okay, come on. All right, that should delete it. All right, we're not gonna. All right, well, anyhow, we have that line right there, and we don't need this either. Let's get the cursor back. Okay. All right, here we go. Here is back. Now we can move around the chart. There we go. Okay, so we made this a little bit bigger and easier for you to see out there. Okay, so as we were saying, once again, we are keying off of this low here from a few sessions back, and we're looking for the market to move sideways to higher over the next few sessions, especially. All right, now we're going to take a look at the British pound US dollar. Now the British pound's been hovering under new move highs for a little while, as you can see right here. So we're going to do the same with this one. Now here we're going to have our trend line from back here through our, oops, hit the wrong, there we go. Okay, so now we have our nice sloping upward trend for the British pound. It's been going on since September. We know that Brexit obviously failed to occur once again. Now we're going to use this low right here, and then we're going to also use this previous high right here as our breakout levels. So we're in a similar situation here with the British pound US dollar as we are with the euro US dollar. And I think that because of the fact that there's no major pressure on the US dollar as far as being bearish, like it's showing signs of weakness, but it's not an overzealous type of environment that we're in. I think that you're not going to see very big explosions as far as if the dollar gets weaker, that the euro and the pound especially are going to see major rallies against the dollar. I think it's going to help to lift them, but not really get like moves like what we saw here in this pound here where it exploded like this. Unless we have a crashing dollar index, I would not expect the pound to have any reaction off of dollar weakness. But as you can see here, the market has started to digest this recent rally and it's going sideways. And this is kind of to be expected after this recent run up. So once again, we're going to key off of these two pivots right here. And we'll keep this one over here because it's just visually easier to see with the pricing there. So right here we have $1.2768 up to $1.30. So this is our area right now where I would look to see how things pan out over the next few sessions. I wouldn't expect very much to the downside or even to the upside right now. So we have to key off the dollar index and see how the market settles. See, right now it's been challenging this high here. This is another key level right here, because if you look at this, we set this high right here. So on a short-term basis, we had made this higher move low, we made a lower move high, we made a lower move low. Now we made a higher move high than this as of yesterday, piercing through there. So this could be a big range trader's delight for the next few weeks. And remember, we're heading into holiday markets with the US. We have Thanksgiving coming up. Brexit did not happen. So the fact that we may maintain a bullish posture here, but we can see this upward sloping support line. We could still have a correction back into this lower $1.26 area and then bounce and just continue to go sideways and drift along this upward sloping line into the year 2020. So we have no real resolution or reason to believe that Brexit is going to be resolved when they are now targeting. And right now it's just more of the same. So I would say that key off the dollar index once again for this market. Now remember that this one is hovering right below the highs, whereas the euro US dollar is coming off of its lows here. So this is a little bit of a different story. Even if this is an arranged trade scenario, it has a little more room to rally, but that's not really much. I mean, we're looking at the markets at a buck 10.80 right here, and we're looking for a buck 11.80, or only a $1 move actually. So it's really not that much. But the ranges in the euro US dollar have been very tight as of late. So let's pull up the US dollar CHF and see what's going on in the rest of Europe as well. Okay, so we have the US dollar Swiss, which is slightly higher. It's been a little choppy. Now the US dollar Swiss has not been getting, it hasn't been reacting the same as the other markets. This one has actually been inverse. Now the fact that this looks more bearish than bullish and doesn't coincide with the euro US dollar or the pound US dollar gives me reason that the dollar index for sure is definitely going to continue to show signs of weakness. Is it that we have strength in these other currencies? That's the tough question. Is there strength in the euro? It's not weak, but I wouldn't say it's strong. Is there strength in the pound? There's a positive atmosphere, but that doesn't mean that it's really a strong currency. I think it's more because of a stalling in the dollar that's going on with these currencies. Now, the US dollar Swiss, just as well as the US dollar yen, are two different currencies that you have to see how they're doing. So the dollar index has been going lower, and the US dollar Swiss has been rallying. So why is there dollar strength there? I think it's because there's an inverse relationship that's going on here. And as we start to see the dollar index fall apart, if it continues to go lower, then we will probably see the US dollar Swiss erode as well. So right now, this market here is channeling. And I think that if you are a dollar Swiss trader, also key off of the dollar index, but in a different fashion. Whereas if the dollar index is trading lower, I think you're going to have a rally going on in the US dollar Swiss. It's a little bit different. Where there's dollar weakness overall, I think you'll find dollar strength in the US dollar Swiss. Now we'll look at the US dollar JPY and see what's going on with that. This is a similar situation where we have dollar strength as not indicative of this market here, and dollar weakness actually has helped to propel this market higher. So this one is also trending in an uptrend. Oops, that edge, sorry. Okay, let's get this down to here. So we're coming out of this upward sloping support area, and it means, what does that mean? Probably very bearish indication that this market is not going to maintain its posture. So we also have a potential head and shoulders that's forming right here. Okay, so let's make this a little clearer here. So you can see the uptrend right here. Then we have a shoulder here that's forming. Here's our neck, here's our head, here's our neck, and we may have formed a shoulder here. And so this trend line here is going to be very, very interesting to watch. So I would say that if you're looking for breakouts here in the US dollar yen, that this previous high that was set a couple weeks ago up here, this is a big line in the sand, and then I like this low that was set a few sessions back. Now let's see what is the rationale for this. Okay, so if in a fundamental basis here, we had recently set a higher move low, higher move high up here, which is what we set a week ago, a little over a week and a half ago. And then here, a couple sessions back, we set this higher move low. So that's why we have this pivot at this low, as well as we have the support line coming in here. So any failure right here is very bearish, and most likely is going to have the US dollar yen taking a challenge of this low right here. And if this low gets taken out, well then we have a very, very bearish market going on with the US dollar yen. Now what would bring this about? I think that this would come about because of actually a big rally in the dollar index. So, but I don't think that that's going to happen. Actually, I think the dollar index is going to take a bit of a hit. And even though it's been trying to hold up in this market, it will probably get a little bit of a drag, but come back and start to go sideways to higher again. Remember, the overall trend is very bullish here. I think right now it's just having a little inflection point because it's divergent of the other major currencies versus the dollar. Okay, now we're going to look at something else in that trade zone. Let's look at the Australian dollar, US dollar. Now we all know that the US trade war seems to have gone from looking a little bit positive to negative, but it doesn't seem to have an impact on the Aussie today. Today we have a nice little follow through to the upside. This, I think, is dollar related. I think where you have dollar weakness and strength in the other currencies, that the broad baskets will help to lift the Australian dollar, US dollar as well. So this one right here, we're looking at kind of positive. Now let's look at the New Zealand dollar, US dollar, and see where we're at with that. As this one's pulling up, here we go. We're making higher move highs. See, now this is a nice chart too. We've been in an overall bull market since October 1st. We had a nice sell-off off of this higher move high up here. We did establish a lower move low, but this could, in the grand scheme of things, this could be the last lower move low for a while. This could be a major corrective low here. If you look at the swings here, these were pretty similar. This is a bigger one. Now we may be getting ready for a very big wave to the upside, or this lets us know where our line in the sand is for the bears if we start to fall apart. Right now, I think you're going to see a challenge of this high up here. Probably not necessarily over the next session or so, but probably maybe before the end of the week we could see a challenge here. Now let's say that I'm wrong here. This also has the looks of a head and shoulders here. Here's the shoulder, here's the neck, here's the head, here's another neckline, and then here is your shoulder. So for sure, if we have anything that comes below this level here at 63.21, that would be a negative indication that the market's going lower. And then we'll also put in our upward sloping trend line here that you can see that since, okay, see, that's not that steep. It's a little bit steep, but not that steep. So if we do come under this upward sloping support line, look for a test here of this yellow line here. Does that mean that the New Zealand dollar, US dollar is going to be a crashing bear? Absolutely not, but we could be in for a nice little bearish slide going into 2020 should these lines be taken out. But I am more leaning towards dollar weakness overall prevalent going into the rest of the year. So I think that that might give a lift to the New Zealand dollar, US dollar, and give credence to the potential chance of more action as well. So we looked at the New Zealand dollar, US dollar. We're looking kind of bullish, definitely positive above that 63.27 or 21 level. Let's go back to our Euro US dollar where we started. And with this market right here, we can see that it is still positive on the day, and it's fighting. It's not, even though it's not a big range, it's fighting to stay positive and hanging right below those highs. So once again, I think look at this little squiggle and jiggle here, that we're probably going to see a sideways to positive trade develop over the next week to week and a half and make a run up towards this 111.81 and maintain a nice posture trading, bouncing up along this upward sloping blue line, if you will. So why do we have this negative idea about the dollar? Well, we might as well pull up the dollar index real quick. And you can see how the dollar index has been breaking into yesterday. This could obviously be just a correction before it starts to make another leg up, but I think more likely that this is the beginning of another wave lower, and we'll see that the dollar index breaking into the December markets and holiday markets. But we'll see how that things pan out. Once again, I think the Euro US dollar right now is one of your best low risk plays, because even though this can get a lot of action, it hasn't been as of late for the past few months. So I think you have this nice little risk area here where we're at buck 10.08 right there. Excuse me, and we have $1.988 as your risk. So really, you're not even risking much for right now. You're looking at let's see, risking pretty much $1 to make $1 in this range trade here. So if you're a range trader, you got opportunities to be a bull or a bear, and I think you'll have lots of chances to play that over the next few sessions. Real quick, once again though, let's go back to the Dixie and show you how on the monthly, this chart here has given us a reason to be a seller. October was a negative month for the dollar index. Right now it's currently positive, but it's off of its highs for the month of November. This red bar here for October was a sell signal. It's a Japanese candlestick pattern called a bearish engulfing line, and it is a very negative signal. So the Euro US dollar, which also has had on the monthly, had a bullish engulfing line. So it's hard to see with this other stuff that's stretched out here. So I'm going to have to take this and delete it, so you can see what I'm talking about. So we're getting rid of our daily analysis there. So as you can see, remove these lines. This green line here, that's called a bullish engulfing line. Now, obviously, the market pulled back, but it's also off of its lows now for the Euro US dollar. So if these are any indications of what's going to pan out over the next few weeks to even a couple, we should be looking for a nice little rally in the euro, probably back up to challenge this buck 15 area. Nothing major, but that would also mean a lowering, weakening US dollar. So let's key off that US dollar index. And if you want to learn more about that bullish and bearish engulfing line, which are sell signals and buy signals, they're high probable Japanese candlestick patterns, which happens to be the name of a book available on Amazon.com that I wrote, and it's available in paperback and Kindle version. And through it, you can utilize the best buy and sell patterns used for over 400 years to give yourself a competitive edge in the forex markets, the futures markets, the options markets, and all kinds of financial derivatives markets. So with that, please always have a trading plan, know your risk, use stops and protection in the market for your trades, and check out the book, and always check out what's going on in the FX markets and other markets at www.forex-trading-unlocked.com. With that, you have a good day, and we will be back soon.